Hi everybody. All right. Today I'm just gonna give a quick lesson on a really important thing, which is not really talked about enough. It's not really understood, but it has a huge impact on trading results. Massive impact on trading results, and of course both wins and losses. Basically, there are two devils in the market. One And I'm going to simplify it so it's very, very practical and can be immediately applied. Right? So I'll explain what it is. And I can't express how important this is. Without this, without mastering this. Oh, shit. 1 second. Oh. 1 second. Anyway, without mastering this, it's not going to be possible to trade. There are two things that, when I talk about psychology, they're really just two major things. There's other things, but these are the two major ones, all right? So, you hear a lot of things, but I'm going to show you exactly what it is and how to deal with it, which is not explained even by a lot of the trading psychologists and all of that, which is another giant scam, by the way. All right, so the two devils have to do with, you guessed it, entry and exit. Entry is what I'm going to be focusing on, and specifically FOMO. All right, fear of missing out. Now, understand, trading is just entry and exit when it comes down to it. The exit can be a stop, it can be take profit, it can be the movement of the stop, and it's very complicated, meaning the underlying dynamics of its psychology and what money means and all of that. So, but let's focus on the entry, the FOMO, right? So FOMO, fear of missing out, is it's like this. All right, let's say you have this is the process of a trading. All right, let's just say it's like this. Okay, this right? So this is before the entry. Before the entry, FOMO is the key thing that's in control. All right? Then, after the entry, you have fear of loss. All right? So it's before the entry. Before the entry, it's FOMO, then you have your entry, then you have fear of loss, and then you have exit. So understand this. Before, the first thing that's going to come into yourself is FOMO. Then once you enter, from that point, this thing takes control, fear of loss. All right? That's really the two devils. The one is before the entry, one is after the entry till the exit. Okay, so now you understand that. All right, so as far as the entry is concerned, all of this right here, right, is something, when you start trading, you must consciously be aware that FOMO is in play. Before you even hit the buy sell button, as soon as you start looking at this at the monitor, you need to be aware that FOMO is kicking in already. It's just starting. You start with FOMO even before the buying and selling. Even when you're doing some analysis or whatever, or basically I would say after the analysis, when you're looking and the market is moving, when that market is moving, FOMO. Even you're looking at the screen, FOMO. All right, now, so I explained that FOMO is the initial step as soon as the market's moving, especially in the morning. If you look at it, all that movement, it'll trigger FOMO. Okay, so what are the types of FOMO? That's the next thing I'm going to cover. You need to know the types of FOMO in order to overcome FOMO. Again, you need to be aware of the FOMO that you're feeling. You need to be aware that you're feeling FOMO, first of all. And that just, as soon as you turn on the computer, be like, okay, I'm going to be going through FOMO. Now I need to be aware of what type of FOMO it is. Your self-awareness of the FOMO is the best way to get rid of it. Awareness of FOMO is the best way to get rid of FOMO. Being self-aware of FOMO, the type of FOMO that you're feeling, is the best way to get rid of it. It's like when consciousness and awareness are recognizing FOMO, or that type of FOMO, it will weaken. And eventually you get good at it, it'll go away. So now the next step is understanding what are the FOMOs. What are the different types? Okay, you may think, okay, FOMO is just fear of missing out. The market is going higher, I feel FOMO, blah, blah, blah. Nope. There are specific types of FOMO, and as soon as you have to be able to identify that you're feeling that FOMO, then you'll be able to deal with it and stop making errors and actually be able to see the market correctly and be able to accept whether it's going up or down and whether it's, whatever it's doing. All right, so let's just go into first of all, it's the early entry FOMO. Right, so this FOMO is, let's say you have a checklist or you have a criteria, right? But you enter before the criteria. It's just entering, it's early entry FOMO. That's all I can say. So we all know about this. Let's say, you say to yourself, oh, you know what? I'm going to wait for the breakout and then the test of the breakout to consider this trade. That's what you're trading. But do you do that? No, you just trade the breakout. So that's your early entry FOMO. Or you might be, I'm going to wait for this spring, and then when it reverses back within the range, that's when I'm going to go to long. But instead you buy the lower low. Or it could be whatever early entry. Like it means that you just haven't waited for all of your criteria to be there. It's like less than that because of a quote-unquote feeling that it's going to go up or down. That feeling is the early entry FOMO. Early entry FOMO, everybody gets it. Recognize this. And you'll learn to master. Basically, it won't be able to control you clicking the buy and sell. If you don't get this, it's going to cause a lot of bad entries. A lot of bad entries are because of this early entry FOMO. I'll give you best example is, let's say you're trading a 5-minute chart. Minute 3, and you want to go long. Minute 3, it's green. Minute 4, it's green. Minute 5, it's red. You're supposed to wait for the bar to close green in order to go long, but you don't wait for the bar to close green, and instead, before the bar closes, it looks green, so you click the buy. But after 5 minutes has passed, it's not a green bar, it's actually a red bar. So that is the early entry FOMO, because you didn't wait for the bar to close green and thought it's gonna close green because 4 minutes has passed and it's still green. And lo and behold, the 5th minute, it becomes a big wick in the opposite direction. So that's early entry FOMO. Very, very, this has caused so many losses, I don't even know. All right, the other is like if you're doing signals, right? No signal FOMO. So this is similar to early entry FOMO, in that you're trading, but the criteria isn't there. Meaning, it just it's just not there. Everything is not there. There's no quote unquote signal. So let's say if you're trading a breakout, there's no breakout. There's no breakout. Okay, so that's like whatever setup, signal or setup, I guess you call it signal or setup, right? That signal or setup is not there. So why'd you get in, right? The other one is there's no test. Okay, so for example, if you trade pullbacks, right, or you this FOMO is actually going to function with a thought, and the thought is going to be like, it's not going to come back to test. When we already know that markets, especially thicker markets, they come back to test, the idea is to buy this breakout or buy this high because it's not going to test, right? It's not going to pull back. It's going, it's gone, right? So this is the no test FOMO. This is also very important because if you plan your trade and you wait for the trade, you get the best entry. And you get the best price, or very close to a really good price where you can manage your risk accordingly. If you suffer from this, what happens is you typically get a bad price, and the chance of the stop out is very high. And also, sometimes it just won't go to your target. It misses it just by little because of the fact that you didn't wait for the deep pullback or test, So I'll give you an example. A lot of the supply and demand traders, what they will do is they'll say, oh, I'm going to buy all the way here, right? This is a test over here, and then it does something like this, something like, okay, over here there's a trend change on a lower time frame, and you're like, oh, okay, now I'm supposed to go long, right? So no test FOMO is, it basically would do something like this. Instead of coming here, it comes here. You go long. All right? Why? Because break-in test, and it's going. So you go long. Then what happens? It goes down, it goes up. So you move the stop where? Right here. Then what happens? It goes all the way down, and then does the test. This happens very often. And then it goes up. So you're thinking it won't test because it goes up, down, up, right? So get in somewhere around here. But it does test later on and does not break out. So this is no test FOMO. Thinking that thought that comes to get in because it's not going to pull back and you're going to miss the trade, that is what this is really a problem. It's a major problem. All right. The other thing is the FOMO bar. So how this thing works is, let's say it pulls back right here, right? I'll use the same example right there. In that area, right there, you get this big green bar. You have all these little bars, you get the big green bar. The FOMO bar will make you think it's going up, it's not going to pull back. This is your FOMO bar, and this is why you got in. So this is your FOMO bar, big green bar, which makes you think, oh, it's so big, it probably broke lower time frame structure, etc., and it'll just go up. But this is the FOMO bar. I can tell you for a fact that this happens all the time on the ES, on the S&P. You get a lot of FOMO bars. And you know what happens? Their low gets taken out. Happens all the time. a rally pullback, FOMO bar goes a little bit higher and then wipes out everything. So this FOMO bar is a big red bar, big green bar, which does, all of that shit. All right. Next is another one. This one you'll probably know. Your eyes glued. FOMO. This one you won't look away from the chart. When you won't look away from the chart, this is directly a result of FOMO. Have you seen or even yourselves, like if you're day trading, you're constantly looking at the chart, right? Constantly looking at the lower time frame, constantly looking at each candle, constantly looking at your DOM, constantly looking that your eyes are glued. They won't look away from the chart. This is really the reason why this behavior occurs, where your eyes are fixated on the chart. And it's really crazy because even your mind is attached to the chart. It's not just your eyes. It is your mind is attached to the chart, whereas it won't let anything else become a priority. Everything else takes a back seat. So your eyes and your mind glued to the chart, FOMO, and you won't look away from the chart. You won't think about other things, even though they're important. You're fixated on the chart. So those guys that look at the chart all day, they're suffering from FOMO. They don't know it, but they're really suffering from FOMO. They think FOMO is just a breakout going higher and, okay, did I get in? No. FOMO has many forms, and this is one of them, where your eyes are glued to the chart and you won't look away from the chart. You won't look away from the chart is FOMO. All right, next is, I don't know what else to call it, but it's like it's obsession or consuming FOMO, where you don't do other things. This is like you cannot do it. It's obsessive and cannot do other things. This actually is a result of FOMO. This you saw a lot when Bitcoin was going crazy, and new traders came in. They became addicted. They have some type of, they actually needed to get this help because they can't live properly because they was totally consumed by the craziness of the Bitcoin going up and all of that, and big money gains and big money losses, and that up and down, the whippiness, where they could have made a lot of money if they just held, or they could have not had losses if they just held. They would have made millions because they went the other way, and all they had to do was hold. This type of FOMO is also extremely dangerous. It's obsessive, and you cannot do other things. This type of FOMO, folks don't understand this is actually a FOMO. All right, so when you're fixated on the, I don't know what the hell to call it, like that particular market and totally consumed by it, you see this many, they say, I was bit by the bug, right? That type of thing, or I'm bit by the bug. They totally become consumed and looking at multiple courses, multiple YouTube, all the fucking YouTube, watching YouTube, looking at this strategy, that strategy, this consumption, this getting mentally consumed. It's a type of FOMO, right? Because if I do this, if I do that, I won't miss out. That's the idea, or I'll get the money back or whatever, right? So this is the consuming FOMO, all right? And the other thing to note about is how you know this is in play. This is in play. How do you know? When you start skipping things, when you start missing things that you're supposed to do, this is the the devil that's in play. For example, let's say you had an appointment and you wanted to, okay, let me give you another example. Let's say you want to go to gym, but you didn't go to the gym because you were looking at a chart or whatever. That's a type of FOMO. What else? I mean, this is what it is. It's basically a consumption of the mind. This type of FOMO can consume the mind, and it can be very detrimental. You'll see this, these two, I mean, not only do you lose your money, but I mean, not only do you lose money trading, but you will not do other things that you're supposed to do because of this type of FOMO, this manifestation of FOMO. And this has addictive properties. So I don't want to talk about it more, but I'll tell you, if you are, the more you're aware of this as it's occurring, the weaker it will get. And the more you'll be able to step away and actually get better results. You know. Also, the one other manifestation is that, let's say you trade in the morning and you made your money, right? But you fucking don't shut off the platform. You continue to look at the platform throughout the day or the chart throughout the day. That's another sign that you haven't overcome FOMO. So let's say you trade from 9 to 10:30 or 11. You bang out a pretty good amount. Why are you going to continue looking at the market? Right? All right, so I'm just talking about this more often than other because I know this how damaging it is. All right. The other thing is everything FOMO. If you look at social media, or let's say you're trading oil and you look at I don't know, if you look at oil, or let's say the ES, but you look at the NQ, you look at the Russell. You look at mid cap. What is that? The EMD, I think. Whatever, mid cap. And then on top of that, you look at news. On top of that, you have a Discord. On top of that, you have Twitter. On top of that, you have a lot of shit, right? This is the everything FOMO. This manifestation of FOMO. To trade one market, you're looking at so many different things. NQ, Russell, Midcap, News, Discord, Twitter, and I haven't even talked about market internals. You're looking at the tick, the ticky, all of that, and then on top of that, maybe you have a DOM, and then this is the FOMO is telling you to look at these things so you don't miss an important fact or something along those lines. So this is like everything FOMO. All right, this is one type of FOMO. What else? We have the minutia FOMO. How this thing works. It's also like everything FOMO, but have you seen let's say you're looking at too much details. That's what it is. Too much details. All right, the above thing, everything FOMO is like looking at different sources and this and that, but minutia FOMO is too much details, meaning you look at the time and sales, you look at the DOM, then you looking at multiple lower time frames. You have a 1 minute, a 3 minute, then on top of it, depth of market, then on top of it, filtering on the time and sales, then the candles, and then there's maybe another type of chart like a footprint on top of that. All that minutia is too much details, thinking that it will give you some important information or you'll somehow do great, is actually the other way around. It will only lead to more confusion and the inability to make a decision. Meaning more details, more confusion, not more clarity. The idea when we take a look at details is to get clarity and understand better, but the reverse happens. It just leads to more conflict of decision making. What else? We have indicator FOMO. There's also a lot of newbie traders, so you're gonna obviously probably know this, but you have multiple indicators. All right, so you see this a lot. Just look at the chart. Just look at your chart. All right, because wanting to be right, and it's like this: the market is going up, but you need this to cross that, and you need diversions, and it's not on this indicator, but it's on that indicator. That's why I use that other indicator, right? That's the justification lie that the mind tells itself. Okay, so indicator FOMO, you'll just see this manifesting. Now, there are other types of FOMO as well. All right, if you don't, multiple setups and multiple time frames. So I'll just give another one. Multiple setups, right? This is a type of FOMO. When you trade, let's say trade breakout, test of break spring, then you trade upthrust, then you trade absorption, then you trade, what else is there? Retest, right? If you try to trade everything, you're fucked. It's that simple. All right, trade breakout, this, that, and the reason is that they all have distributions. So the way you're going to get screwed is that if you have a one loss on the breakout, and then you have a loss on the spring, and then you have a loss on one more, even though they're one of each, the 3 or 4 losses in a row will cause tilt. And once tilt comes in, it's really hard to deal with. It can lead to losing streaks, and you can't break out of those losing streaks. And that has to do with, so multiple setups. What else? Multiple markets. This is another one. Multiple markets, I mean, that you get the idea, right? So if you have a futures trader who's looking to trade intraday, and he's trading like 12 markets, 10 markets, there's a problem. Some people can do that. There's some professionals that can do that, but most can't. Most regular retail trader cannot do that. This multiple markets typically are with the stock trading rooms. So multiple market, all right, so multiple market FOMO is usually in the stock trading rooms. They are notorious. You know why? Because they want to mention the winner of the day. So what every fucking thing that goes up like 50%, 80%, 100%, 200%, they have to mention it. When they mention it, the subscribers, they start looking at this stock, that stock, the other stock, and thinking, oh, maybe one day if I get it good enough, I'm going to be able to get this 80%, get that 100%. But they don't realize that they're operating on FOMO. So multiple market FOMO, this is propagated by the stock trading rooms. This is one of the reasons they're so exciting, is because of this type of fear. That's why they're on edge. Multiple market, this is running, this is a runner. If you just join any stock trading room, right, and at the morning when the stocks are going out, the moderator will mention A, B, C, D, E, F, G. Maximum FOMO and maximum losses. All right, and also chasing, a lot of chasing, getting in late after the fact. What do you think that's going to lead to? There are other FOMO, not shutting your platform off. For example, if I guess you could just put it on eyes glued FOMO, but these are the major ones. There was one. Oh yeah. Constant change. This motherfucker, this one right here, is so dangerous. I don't even know what to say about it. This FOMO, right? It manifests in a way where you think you're evolving, or you're learning more, or you're deepening your knowledge. But typically, the way this thing works is it's a constant change, changing indicators, trading plans. I don't even know what else, but even methodologies. You know, changing indicator, changing trading plans, going from stocks to options to futures to forex, right? Constantly coding indicators, right? Coding indicators, constantly tweaking, constantly changing your the charts, modifying charts, right? Now this is also one very, very deadly type of FOMO because it's never ending. This constant change FOMO, it never ends. This type of FOMO, even if you have something good, you'll self-sabotage it and go to the next thing. Even if you have something good, you know, if you have a good, you know, let's say you're I don't know, you have your indicator, you have your market, you have all of that. Next week, that'll change. The following week, you'll go from futures to options. If you're getting a trading video learning, right? You'll change your whole method. This is the constant change because you're in search of something that works to your expectations, and the market and YouTube and other marketing channels show you, oh look, I made this much money, I made that much money. Oh, this is something, you know, the what do you call shiny object, right? So this right here is really, really problem. Until you stop this, you can never be consistent. That's why constant change FOMO will ensure you're never profitable, because you cannot be consistent, and so you cannot ever really make money. You can never. And also, typically, if you're trading during the time of constant change, right? If there's constant change and you are trading during that time of constant change, guess what happens? As long as there's change, there cannot be wins. As long as the thing is evolving and changing, there cannot be wins. You might get a win here or there, but it will generally be a losing streak. Constant change will ensure there's a losing streak with maybe a win, one here, one there. As long as there is change, there cannot be consistency. As long as there's no consistency, there cannot be consistent profits. It'll actually be losses. All right, so this is FOMO. There are others, you know, but they're all derivatives, like, you know, trying to trade multiple sessions. So if you wake up 3 o'clock or, you know, Asian session and looking all that, that's actually a type of FOMO. I guess you could call it session FOMO, but because you think it, you know, that there's some opportunity there or whatever. So there's fear of missing out on that opportunity. So trying to trade multiple sessions is FOMO. I guess that's important, so I'll add it here. I would say even trying to trade multiple in the same day, like trying to trade morning, afternoon, I would even say morning and afternoon. If you try to trade both, there's something not right. All right, trading morning, afternoon, then you have Asian, you have London. So this is fear of missing out. Okay, so you have that. This is session FOMO. You gotta overcome this. If you want to trade just 2 hours a day or 3 hours a day in the morning, be just done with it. You gotta overcome this. This one is it's hard to stop, especially if you have a loss in the morning. You want to make it back in the afternoon. So I get it. It's really hard to stop, But this one is pretty dangerous because, especially if you have a winner in the morning and you continue to trade, the chances for the loss are quite high because you're running on FOMO. So the mind cannot perceive information clearly. That's the other thing I want to mention. Why you get losses is because FOMO and the other fear, or basically fear, FOMO and the other one, fear distorts perception, or the correct perception of information. Again, fear, FOMO, like FOMO, right? It distorts the correct perception of information. It will block out, it will filter important information. Fear has this quality where you cannot see. You cannot see. And this is what explains losing streaks. Losing streaks, this is one of the things, right? But are typically done under tilt, constant change, FOMO, fear of loss, trying to make your money back, etc. So what happens is what you see, you cannot perceive. You just can't perceive it. It's like, I don't want to say trading blind, but close to it. All right. Let me see what else. I think I mentioned enough, but as you can see, FOMO is far more complicated than what you might have, what the general consensus is like, oh, you're just buying the high. Just buying at the high or buying a bad price. That's a way oversimplification of FOMO. It doesn't show you how it manifests in all of these different things. And until you understand what these things are, even a basic understanding, you won't be able to recognize them. And if you can't recognize them, they don't fade away. Now that you know what they are and you write down, okay, these are the FOMO that I typically suffer from. And now when you trade, before you trade, you say, okay, these are the fears I'm going to look for. I'm going to look specifically for. I'm going to be aware. I'm going to look for them. Then something happens where you're about to trade, the FOMO kicks in, you recognize the FOMO, and you don't make the error. And in fact, you actually make money. It just switches. That's the way it works. So it's the recognition of the FOMO that you are feeling at the time that you are feeling it, that awareness that gets rid of FOMO. But before you do that, you have to identify the types of FOMO, basically these right here. All right, take care. Bye.